Okay, what's going on? This is going to be the recording for Tuesday, August 18th, 2026. First, what we're going to be looking at here is going to be the dollar index. So this is kind of what we always start with when it comes to the stream. We're always looking for, where's the strength on the dollar index? Is it going to go higher? Is it going to go lower? And what are we going to do on this asset? Okay, so what we were looking for when it comes to the actual daily bar was we were looking for price to, since we've delivered these 99.40s, we were looking for price to possibly start to continue this bullish run back above 99.70 here on the right, and then possibly back into this 99.76 area, but possibly more into this like 99.80. So like fill in this 50% of this gap area. There was also a nice gap here in the 99.95s. But really just really watching this weekly, daily, with it being Wednesday tomorrow. If we can get a daily close, I would think above market, we could start to make our way up for last week's high, last Thursday's high, and then possibly start to make our way up through here. So we'll look at a couple things that we have coming up on the fundamentals to see what could affect the chart. But the one thing I want to focus on today is going to be the NQ, right? The NQ positions that we took. There was a nice buy position, two buy positions, even though we were in the sell side market. Just looking for that short covering from a higher time frame perspective. And so really quick, let me see where the Discord, where we had that. Okay, so we'll just jump straight into that. Let me go ahead and go over to here. Okay, so we'll look at the 1 hour and the 15 and the 5. Now, what I was looking for when I talked about the seeing more upside on dollar index means we were going to see more downside here on the NQs. Now, one thing you can notice, right, when I'm looking at doing my pre-market bias at 7 a.m., and I'll just move this, it's just a liquidity thing. As you can see here, okay, I'm going to move this up to here. As you can see here on that 1 hour, right, on the left, this is the daily open, right? So this is going to be the open for Tuesday, essentially 30,100. And overnight price had fell from 30,100 all the way down, right, into where the London low, there was like a London low here, I guess, where was that at? Where they basically came down to this low here, basically 29,700. So they fell from 30,100 down to, what is it, 20,700. Okay, so let's just say from here down to here, about almost 400 handles. Okay, and most people are probably taking this after the breakout. Okay, so they're probably going to take the trade somewhere like in here if they took the shorts at all. Okay, like swing traders type situations. So coming into it, we were seeing, if we already have this much massive overnight sell-off, then we were anticipating higher time frame liquidity to be delivered, and then pops of the market, right? So short covering, especially if there was a capitulation at the New York Open. And so when you look at let me look at the higher time frame here if I have it. When you look at this picture, I want to pull up here really quick. Or let's go through the bias actually first here. Okay. And so when you look at the overnight, like I said, I'm anticipating the shorts to cover, right? So I'm putting myself in these individual shoes here. I'm putting myself, in the individuals at 29,850 and just kind of trying to understand like what it is that they possibly could be waiting to short cover, or where could they be trailing their risk down to. Okay. So for, buy stop liquidity to be like pushed down from sells. Okay. And so when you look at the higher time frame, right here on the left, you have the 4 hour, on the right, you have the 1 hour. What we were anticipating and wanting to see as well, right? Because this was the daily open here on the far left, okay? And then coming all the way down, what we were looking for was this 4 hour candle here. And then we were looking, if you're looking on the right side really quick, on that 1 hour candle. So basically the 29,600, okay? So we are looking for price to dollar index and oil to stay strong and to push us down on equities, right, and indices, okay? And so we did push down into that level. So I'll go back over here. So we did push down into that level. And so this is how New York Open was. I'm going to go over, like I said, 1 hour and 15, then 15.5 in 1 minute. And I'll go over the order that we took. So we ended up taking one, I believe, here around that 9:15 time, which ended up, closing a small profit before coming back to break even. And then we took another one here. And then one of them, I believe, we hopped off stream and then waited for it to play out. Okay, so we'll go back and look. But going back to 15.5, let's just go over the New York. Okay, the New York Open was here. Now the New York was very choppy, and you can pretty much expect it to be that way when we had such a fall off on the overnight. Now the one thing I will say, like when you go back to a 1 minute and you're looking just at equities open here, is right 1 minute here on the right, 5 minute on the left. The very first candle, okay, of that 1 minute exploded up, creating that bullish momentum, right? So this is 8:30. Let's make sure we get the time. This is going to be 8:30 here on the bottom going into 8:31, then 8:31 going into 8:32. So as you can see, right, what they ended up doing, and I tell people this all the time, it's called a Darth Maul candle, okay? So if you look on the 5 minute here on the left, okay, this candle is, if you guys have ever seen Star Wars, that's like a Darth Maul candle, okay? So before this next candle even printed, this is all you could see at one point. That's crazy, okay? And so when you see that type of price, you have to be understanding that, there's going to be buy stops and sell stops resting above and below this type of price. Okay, so this is pretty much what we were reading coming out the gate in the very first 5 minutes. So 8:30 going into 8:35 was Darth Maul candle. Okay, now, okay, let's take our eyes off here. Now that next candle, okay, the very next candle, 8:35 going to 40, we ended up getting the bullish push, right? So as we're watching this on the live, I was, seeing price, come up, hit that 750 level, right? Failing to break past the, let me run through this here, failing to break past the supply candle here at the 29,700, right? And so with them not being able to break past that candle, okay, I was basically seeing this as like, okay, well, excuse me, this candle here at the 29,750, sorry, the 29,750, if they weren't closing bodies, right, like they actually weren't closing the line graph above that area or like attacking those 750s, then I was seeing weakness on the market, okay? And so what do we get inside that special candle? Okay, so we're looking here and looking left to get right on that 1 minute. We ended up getting the Empire State Building, right, the crown formation, okay? So that's the sign, the signature that, price is going to fail the area. Now, as soon as you would want to go short in this area, now I was actually looking for possible shorts in this area, but I wasn't as confident yet after they closed the 35 to 40 candle so bullish, okay? But as they started to, fall over after they took that New York high, I was starting to see like the New York low become the next target. So a lot of the times when you're taking the equities open trades, right, they came and they grabbed the liquidity here. And so the only thing that was available, the only thing that was open was the New York low at this point. Okay. And so as that price rolls over and rejects the 750s, they start to attack down and sells win this type of position back into the area. So how would have played this if I would have played this, because I didn't play this, was I would have liked to see that crown formation like this, sign of weakness, second candle, and then when it's coming down back into the 5 minute like supply like 700 zone, that would have made it a little bit more difficult to take the trade, because then you would have eventually would have come down. If you wouldn't have it already hit your TP, it would have come back and like stopped you out. So the area I would have really liked this is like when you see the rejection away from the 750s and then you started getting the break inside the 1 minute, okay, inside this 1 minute supply area. So always looking for that 1 to 3, especially in these markets that we've been playing in now. And the only time that we're wanting to extend the R multiple is when we have a for sure typical liquidity target. So a New York high, New York low, London high, London low, daily high, daily low, weekly high, weekly low, just any kind of area of major liquidity. Okay. And so like that area away from the areas that we look for the entry strategy are that area was about a little bit over 5 times your risk. Okay, so it's like almost 6 times your risk getting through that liquidity here at that 855. Okay, now like I said, I did not take those shorts, but we ended up watching this area play out. I've seen a lot of people that did partake in those that were pretty good, right, and that did fit the bias of what we wanted to see, a little bit, stronger dollar. We were also seeing, quite a bit of strength here on the U.S. oil. Okay, so oil was, taking those highs at the same time. So I was kind of thinking like, are they liquidating their positions here? We're going to finally liquidate, buy positions here, and they'll see a push. Okay, but it was just consolidating essentially. If you really think about how this price looks now, okay, on oil, looking at the whole day, that looks like a consolidation. Okay, just like when I look at it like that. Okay, So going back over to New York, okay, so we ended up coming in. This is that kill zone window when we like to be looking for the market to shift, okay, and so that's when that 45 going into 50 started to break down. Now, like I said, I wasn't in any shorts. They delivered the stops here, and then they started to kind of show the price like they wanted to go higher, okay, and so in this area, I believe, okay, it was at 5 minutes on the strength. Yep. So in this area, because they had taken, excuse me, they had taken those New York lows, and I knew that we were so oversold for the day. I was looking for 5 minute sign of strength and a potential buy position to play back up into the New York highs. So we ended up getting that in the kill zone, 8:55 going into 9 a.m. I was looking at the New York highs or anything above New York open, essentially just getting above this wick, excuse me, was a low hanging fruit. So seeing that sign of strength candle, drawing the line down the middle, right, to kind of get an idea if this is possible the right side. Now remember, I have that higher time frame context in mind at this point. Like we're down on the day like almost 400 or 500 points, okay? And so looking at this, okay, you have the sign of strength, and then I'm looking for really, really nice 1 minute mitigation price, right, to be able to play back up to point of interest where I can protect or pay myself or start to push price to the next level up, okay? And so over here, let me do this really quick. Okay, so over here, this is where we actually took the entry, okay? So this is the one I'm actually going over. We got the 5 minute sign of strength, as you guys can see here off that 600 level. Then after that 5 minute sign of strength, we started to get the 1 minute mitigation price action, right, on the right side of that sign of strength. Now I had 4 contracts on this. I had a 20 handle risk to start. It delivered my before I even took the picture, it delivered because it was, if you guys were on stream, you guys remember it was a pretty fast move. It delivered the 60-point move in like, what was this from our entry? So 1, 2, 3, 4, less than 4 minutes. Okay, so less than like almost a 5 minute candle, right? It ended up delivering. And so we talk a lot about like after playing the second, seeing the signal candle that the move is going to happen a lot of the times inside of a 1 minute mitigation on the right side after the signal candle, and it's usually going to dig inside of the second 5 minute candle. Okay, so this is your signal. I talk about this a lot on the stream, and then this is going to be your candle here. Okay, the second candle where the 1 minute mitigation is most likely going to appear, where you need to frame up the edge based on the probabilities that it teach. Okay. And so this was a really, really good setup, right? Ended up delivering, like I said, 29,620s, obviously pushed up in less than 5 minutes up to 29,680s, which was a beautiful push. And as we, inside of a bearish market, especially, okay, being able to act on your edge without reservation or hesitation and being able to pay yourself as the market makes money available is going to be key, okay? And so that was that move there. So let me go back to the middle screen here so we can break down this trade a little bit more, okay? But that's the area we got in 29,620, so I'll leave that up here really quick. So like I said, 5 minute sign of strength inside the kill zone, okay? And then now this is the only thing I didn't like about this, and this is probably why the algorithm wanted to push price a little bit lower, is the second candle was outside of the kill zone, right? So that second candle that I like to play that I'm talking about here at 920 going to 925 was outside the kill zone. Now, if you go back and look at data over some of our last, few trades on the stream, you can see that we've taken a lot of good trades that roll over from 925 into that 930 close, just because the algorithm does like that price time as well. Okay. And so, like I said, seen this price kind of push up here. This was around like 920, and then we started to push back into those 29,600s. And then as we started to push off of this area, I was able to come in with our risk reward tool, right? And you see my entry was 29,617s over there. So I believe I got in right here around like 923 going into that 925 close. And then I was looking for just a simple 1 to 3, right? Getting back up to point of interest and being able to protect or pay myself, okay? And so that's what we were able to do. Like I said, I had 4 contracts on this. It's delivered the 60 points, knocked off 2 of the contracts. I ended up going risk off on this remainder, okay? And then that remainder, as you can see here, as we were able to come up to the New York Open. Now, not only that were we coming up to the New York Open, if you look left to get right, okay, we were coming into the 5 minute supply candle that was in alignment with the 29,700. So this candle right here, let me go ahead and highlight the exact candle I'm talking about. If you're watching the recording, it's going to say institutional candle right here, but I'm just using it for the color, okay? But essentially actually is an institutional candle too. But so this area here on the left, if you're looking, okay, let me use the arrow. Okay, so that area was acting as a level of resistance and a level of supply in this part of the range as we were continuing lower. Okay, so as we came up to here and we delivered 3 times our risk, but we weren't able to break structure or push higher or get to the actual supply of like this blue line here, which is defining the right side of the V, then that's when you need to cut some of your position, right? You need to have that awareness to be able to do that, and that's pretty much what I show on stream. Okay, so now that position was over. Price, rolls back over here around like 940 going into 945. So that perfect time that we like to see the kill zone, and rolls over here 945 going into 950, and then 950 going into 955. You have the capitulation and the run on more buy stops. Okay. And so protect or pay yourself in New York Open. Like I say, I always say that all the time. Okay. Let me bring this down here. So then, okay, because I just wasn't, me personally, I wasn't into like the New York Open sells, right? And I just still thought because of, how we were looking for the overnight, we ended up coming down at another part of the kill zone, right? So we had just ran some liquidity. This was 950 going into 955. And then we had 950 going into 10 a.m., right? So at this point, there's really nothing you can see but bearishness, right? So if you're looking at a 15 and 5, at this point right here, right, when I'm looking at this is all you can see on a 5 minute, okay? Is you see a run on stops, and then you see price still continuing lower. So you're still waiting on some kind of sign of strength or something that's giving you the idea, right, that the sellers are going to be covering their position and that you could find edge on that type of position. Now, on the bigger picture of things, this black line right here, so this is at 9:55 going to 10 a.m. This black line right here goes into my higher time frame bias that I gave out on the Discord, okay, that we would come for last week's low. So if you look here, this is the 4 hour on the left. This is going to be the 1 hour on the right. As you can see here, this was last Tuesday's price that they ended up running the lows. So we completed the range. We ran all the way up, right? We sold off. We took the area, took 30,300, and now we fell all the way back down to outside the range, okay? And so this is like an area we were waiting on as a potential to find a nice push back up that could potentially run back up, or just give us enough, like I said, to give us a 1 to 3, 1 to 5, and then possibly see more rollover, okay, down to like 29,450s, or possibly below this wick to fill this massive FEG that we have below. Okay, so we'll be continuing to watch this area, but that's like the bigger time frame bias. Okay, so it brings us back to where we were, 9:55 going into 10 a.m. Okay, so as you're looking at this now, we know what we're looking for. Okay, now this was a little bit manipulative here at 10 a.m. They did close the sign of strength early, right? So they did the 10 a.m. to 10:05. They did do a sign of strength. Now, for me, let me go to a 1 minute and show you guys what this looked like. Now, when I go and look at this one, right, just like I looked at that other one and waited for that 5 minute to close. Okay, when you're waiting and you get the 5 minute close and you say New York opens your target, New York high would be like amazing, going higher and taking over some of the day that we've had, okay, from all that way down would be really great. But for right now, we're looking for low hanging fruit. We're looking for things that, we know are going to deliver, okay? And so when you look at this price here, okay, I'm going to draw that same line down this candle, the 10 to 10:05, okay, but we know the targets that we want. And let me go to a little smaller time frame here. We know the targets that we want, okay? So let's draw it from here, this candle here, up to target. Now, the one thing that you can see here is we have taken that first trade. Now, this is where my scratch came. So I took one scratch and then I took the last trade of the day that we ended up taking, okay? We did just have market open here about 3 minutes ago, so you might see price starting to move slightly. Now, they closed the price here, 5 minute, 10 to 10:05, and then as well, okay? For me, I was identifying this because you couldn't really see, anything on this, like 10:05 going into 10:10. So let's kind of run back here a little bit. All right, so when we get back to this exact point, okay, where I'm thinking, okay, 5 minute, and I'm gonna move the line because you guys know that's how we divide to see where we're getting to the target, okay? And so at this point, I'm thinking, okay, and this is all you could see on the 5 minute was like this, okay? It would have looked just like this in a situation right here. At this point, I'm wanting to buy this, okay? Because we've shown that 5 minute sign of strength, right? We've taken a draw on liquidity, and we have New York open here, and I have a 1 minute setup, I believe, in this area right here, okay? So I'm thinking from risk to entry, right? So from the low, right, I'm trying to get that low right there the same. So 526.50 to be the same. Okay, and then I'm trying to enter inside the demand and discount zones. Now, as you guys can see here, sometimes it's just a part of the game. Okay, bang, takes us out. Okay, now let's go back and look at why it takes us out in that area, but it did present the signal. Okay. Now, the reason I believe, okay, that this ended up happening was because they only bottom ticked the area, right? That last week low that I was talking about. So, really quick here, right? They bottom ticked that area that was the first tap away from it, okay? And so I'll take that. As long as I'm playing the signal and I lose, I don't care, okay? But if it's just like an emotional trade, then it's a whole different story. Now, let's move forward here a little bit. We're still inside the kill zone, okay? And if you have a bias, right, you have a bias. Now, what I'm not going to do is I'm not going to go in here and lose the setup like I did, let's say like right here, like on that 10 to 10.05, take a setup and then lose and then try to sell this position and think it's just going to roll over. Okay. I've been doing this long enough to understand that like where we're at on 4 hour, 1 hour to understand like you're not going to sell a position at a draw on liquidity unless you're brand new. Okay. Like and there's nothing wrong with that. Okay. I'm not saying anything like that. I'm just saying like we know that. Okay. And so, experienced that partial win on that first attempt, okay, then experienced a loss, right, of 1R, and then came back, okay, and we ended up getting 1010 to 1005. We ended up getting a sign of strength. Now, at this exact moment, price is not showing you it's not showing you any bullishness, right? Like at this exact moment, it's showing you lower low, lower high, lower low. But because we were failing to break below that last week low, and it was starting to get to a point like on a 1 minute, if you can kind of look in here after we close this exact, like as soon as we close this candle, right, another sign of strength, I'm thinking people probably sold this low end at the last week low and they're trapped. And this is what I talk a lot about, like sellers being trapped in certain positions. Now, as soon as this closed 5 minute and being inside the kill zone, it's a candle that I'm definitely going to reference. Okay, so draw your line down the candle. Okay, and then can you identify in a 5 minute close, right? Because this is going to be outside the kill zone. Usually, like I said, 930s are good. 1030s are also good as well. But it has to be a 5 minute close, right? You want to be buying when the market's crashing, and you want to be selling when it's taking off. And so, on the right side of the signal candle, can you identify in a 5 minute close a 1 minute mitigation? Okay. And so, as you can see here, we go back. Okay, 5 minute close. Second candle is always going to dig, and that's where you want to find your 1 minute mitigation setup. And then by the third 5 minute candle, it should be changing the state of delivery. Okay, and so I just know that from playing lots of mitigation setups. Now, where's that 1 minute position? Okay, 1019 going into 1020, the price would have closed. It looked like this. Okay, so not as promising. People are probably trying to sell this at this point to just like lower low, lower high, lower low, and they're trying to sell this thinking it's gonna roll over, okay? But they're not understanding what's high and what's low. Okay, now if we go back, so I'm just showing you what you can see there. Okay, now if you go back, that next candle, 1020 to 1021, closed bullish, and then 1021 going into 1022, closed bullish, and then you have a breakout on that 1 minute demand. Now, let's look at if you bought in different zones. If you're focused on the candles that I teach, right, you'd be buying somewhere in this zone here, which also puts you in alignment with the 5 minute demand and discount zone candles. Now, if you're buying the 5 minute, or excuse me, the 1 minute here breakout, on this zone, I still think because of you're inside the special candle, which we like to look at the 5 minute, this is our special candle in this zone, okay, to reference our trades off of. And then looking at that trade being below the 50%, I say you'd still have a pretty good setup. Anywhere below the 50%, and it's pretty good. Anywhere above it, okay, or like at the open of the candle is a little bit more likely that you're going to take on heat, or price could reach back down and spike you out, okay? And so I like the entries right in here, okay, like in these 50s. I believe the area that we ended up taking will look here. Let me go down here and see. Just the original trade. This is our original trade. Okay, I'm just trying to see where's the other one out here real quick. Okay, so I don't have the exact screenshot, I guess, from that one. I gotta see. Okay, so when you go back into, so I was just looking for that, the one for this one. Okay, so we ended. Let me look on the Discord actually really quick. That's probably where it's at. Give me 1 second here. Okay, yeah. So when we finished the stream today, we were looking at this area. So we had already, like I said, bodied this area here. Okay, on that first run up, it was definitely 60 plus points and 3 times your risk, etc. Right? Now it didn't break the New York Open. That gives us the idea to like protect our pair ourselves, right? Now, as we hopped off stream, we still were looking for the potential buy positions in that zone if we were going to get the 5 minute and 15, 1 minute price. And this is the area that I was calling out. I basically took a picture. I think that this is from my phone. But I was taking a picture of this one and saying, if we break that low end area, okay, like that area here where I think people would have like seen this lower low and probably tried to sell those 550s and not realizing that we're at that last week low, that those sellers were, their risk was going to be, the buy stops are going to be sitting right here, right? They were going to be trapped. And that's what could be the catalyst that pushed us back into like the 600, 620 level in the original New York low, or basically this FEG here between 640s and the 620s. Okay. And so that's what ended up playing out. It was a pretty good move. Let me go back over here. Okay. It was a pretty good move off of this area. And so, like I said, you just want to make sure when you're taking that trade that you're using time in your favor, you're using location. Okay. And then we were able to take that one back up to, let's see here, see where the entry was on that. We're looking at the 534s, okay? So that first sign of strength, and then we had the dig on the second candle, okay? So 534s would have been here. Looking for 1 to 3 buys, okay? 534s is here. Okay, and so looking at this area here, okay, and make sure that's what we were saying. And we, like I said, we didn't take 534s. We ended up getting inside this 1 minute candle, okay? And so we were using this as like our risk, okay? And then we were using, trying to move the little thing here, okay? That 1 minute break in price, okay, that broke out in this little demand area here, out of the 5 minute area, and we were wanting to attack that up. Now, if you were able to attack that up for a 3R, that was a good position. I was able to do that, and then I was wanting to hold the rest of the volume on this trade up to the supply zone. Okay, so like I still had that right side of the V mindset. I was still looking to attack that New York Open or maybe New York shorts. But the main area that I could see that could be a potential, stopper for me was the supply zone, right? That was sitting right here, this order block supply zone here. And so like even if you can get up into that area, like for a 5R on like a runner, that's great. But if you see anything start to break down inside of this zone, like it started to break down here around 11:10 going at 11:15, that push alone from this area here, guys, if you're using proper size and proper risk reward, that move alone up to that area being 100 points is going to be enough. Okay, even if you're on the wrong side of the overall trend, right, and price actually rolls over and then continues to possibly go lower or something like that, it's fine. Okay, because you're focused on not being right and beating the market. Your goal is to be right for the time that you're in, for the short period of time that you're in. Okay. So essentially, it is still you're trying to beat the market, but you're trying to beat the market at your game, not theirs. Okay. So that was the entry that we ended up taking today. Okay. I thought the New York, just for people who were looking at that, was pretty choppy. Okay, it would have been definitely really difficult, I would say, until like 8:45 going into that 9 a.m. Time. Finding shorts in here at the low end, like people who do this, okay, people who can find shorts on positions like this when price is already down 400 or 500 points in a day, more power to them. But 9 times out of 10, 7 times out of 10, those moves, those sell side moves, people don't manage them right, or they're short lived, or they trail their risk too early or something. And so, like, if I'm going to have a short position, okay, obviously you're not going to have the overnight position here at the daily open, or you're not going to most likely have most people aren't up at 2 a.m. London, okay, to have that beautiful like price action type position. So to sell again at New York to me, um, just didn't make sense to continue to push it down lower at that time. Now my bias was I still wanted to see them come for that last week low, okay, but the way that they engineered the shorts at the New York, you would have probably have to, you would have had to really be locked in on that 5 minute supply zone. As soon as it started to fail that area in crown form, you would have had to been locked in, okay, like right there in that first 15 minutes. So, not saying it can't be done, but I'm saying that a lot of times it's when prices capitulated throughout a whole day like this, it's a lot easier to find. On the flip side, right, when these shorts start to cover, okay, they're putting buy limits into the market, and it's an easy layup play. To where you don't have to manage as hard to get to your targets. Okay. So that's going to be it for today. I appreciate you guys watching the recap. We will be on the same time, same place tomorrow in the Discord. And I look forward to trading with you guys in the future. So have a good night. Peace.